What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very volatile day but overall closed relatively flat on the day. What does all of this volatility mean and where do we go from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart. See what's going on in the stock market today. Alright, so today on SPY we were down 0.12%, but it didn't come without tons of volatility, and you can see intraday we did test that very critical support trend line. So remember the Stocks Channel IQ test, which you did take today whether you knew it or not. Did you panic sell down here at this very critical support level, or did you start taking on long risk reward ratio trades? Remember, if you're taking long trades off of very strong support, you have a great risk reward, which essentially means you have a lot of upside and very little downside before you know to cut for a loss and take an exit on that trade. So when you get great risk reward setups like this, you should be prepared and you should know exactly what to do. And that's exactly what we talked about in the weekend episode. So I gave you this very critical level to pay attention to right at SPY levels of 456 to 457. And you can see intraday we had a monster bounce off of that level, and we did not even go lower to close the gap at 455. We closed all the way back above the 50 EMA, but we do have to start respecting the fact that we are losing the daily bull trend. So following price action, this was a very bullish bounce because we bounced off of the exact level we expected, which is our critical support trend line. Remember, if we start closing below this trend line, we are very likely going to significantly increase the probability we see the full-blown stock market correction, which does mean we could see SPY drop 10 to 15%. From intraday all-time highs to the closing price, we are only down about 3%, and from the intraday low, we were only down about 4.9%. So we haven't even seen a full 5% pullback in SPY, and we're already starting to see everybody losing their minds thinking the stock market's going to crash. If that doesn't ring any bells and remind you of the whole entire year last year, then I don't know what will. Remember last year we never saw a full-blown correction, and every time SPY pulled back 5%, everybody was losing their mind and we just continued to grind higher. So I'm not saying this time is going to be the same exact scenario, so you still need to watch that very critical breakdown level. And as long as SPY is now holding above that support, you still do want to remain bullish in the long term. Intraday, we could still see volatility and there could be plenty of bull traps and bear traps alike. But big picture here, as long as we're staying above these critical support levels, there's still the possibility we're not done going higher. So continue to watch support, and we're now back above the 50 EMA, so you need to watch that support at 464, 462, 457, and the full gap close at 455. If at any point we start closing below 455, you need to be very cautious because we could be coming all the way back down into the 430s. So keep it that simple, and as I always tell you, the stock market can be as simple or as complicated as you want to be. If you're not disciplined and patient to wait for these critical tests and let price action confirm where the market's going, you're not going to be trading for very long because it's impossible to stay profitable if you're panic selling. If you don't know why you're buying, you shouldn't take that trade at all. And if you don't know where your exit is, you shouldn't be taking that trade either. Know your entries and exits and manage your risk accordingly, and continue to stay patient and disciplined. To the upside on SPY, you need to look for resistance right around 468, 470, and the breakout level will be back above about 472. As soon as SPY starts getting back above about 470, it will be looking a lot more bullish. And remember, we could see a quick chip back to all-time highs. You can't rule it out because we are still in a macro level bull market. Jumping over to the triple Qs, you see a very similar sign as SPY with a very volatile day. And at one point, we were trading way below the critical support trend line, which is right here, right around 375 to 374. And intraday, we did hit a low just above 369. Now, closing prices are what matter the most on this daily chart, and we did close well above critical support, and we actually did close in the green, even though we were down quite a bit intraday. Now, on the triple Qs, you can see very clearly that we've lost the bull trend, and we are at this very critical support level. So now is not the time to be panic selling on your long positions quite yet, because this could still be a great risk reward setup. Remember, on the triple Qs, if we start breaking below 374 and start closing below that level, it's very likely we're going to close the gap down here at 360. So as long as we're above 374, we could still go higher, so we need to respect that very strong support level. To the upside, we're now going to have resistance at 383, 387, and the 50 EMA right around 389 to 390. If at any point we start getting back over the 50 EMA and closing back over the 20 simple moving average right around 392, we could go back into another bull cycle, but we'll still have that very strong resistance right around 400 to 401. So follow price action here because we don't have the benefit of a trend for the bears or the bulls. Price action is going to tell us everything we need to know, and right now we see price action holding above that critical support. Jumping over to the Dow Jones, you can see a very similar sign as the rest of the indices with a very volatile sell-off, but a very strong bounce off of the lows and closing higher for the day. Now the Dow Jones by far looks the most bullish of all because we still have the bull trend and price action still above the 20 simple moving average. So the Dow Jones was benefiting from a lot of that sector rotation because we were seeing selling in the tech sector, but a lot of buying in the financials and industrials. So the Dow Jones is holding up very strong, and it did close above our breakout level of support right around 360 to 361. So watch that as strong support, and below that you're looking for the 50 EMA at 358 and the next strong support level down here right around 355 to 356. If we start breaking below those levels, we could close the gap at 350, but again, you have the strong bull trend and you're holding up above support, so there's no reason to believe we're going down there to close that gap. We could still be going higher. So to the upside, look for resistance at 365, 368, and the brand new price target is an all-time high at 372. Jumping over to the Russell 2000, you could see that we did close down 0.35%, and we did close that gap down here at $213. So right now, the Russell 2000 is still closing above this critical support trend line at 214 and has a minor gap to fill above right around 216. We're starting to develop a lot of bearish trending, and price action is below all the moving averages. So it is still possible this was just a bearish relief bounce and we're still going down for a next leg lower to finish out this bear market. If we do break down below 214, you're looking for the Russell 2000 to come down in 207 and 205. And a bullish breakout will need to get all the way back above about 224, and then we could close the gap just above 228. So to the upside, look for resistance right around 218, 222, and 224. And above 224, look for resistance at the gap close right around 228. And above that, we need to break out above 231. If we could see the small caps breaking out and closing back above 231 and 234, it will be looking a lot more bullish. Otherwise, we're still looking for more downside because we have such strong downward trend. On the ARKK ETF, we were up 0.25% today, and intraday we did test that very strong support level down here at $81. Remember, ARKK is in a full-blown bear market and needs to get all the way back above $99 to start scaring away the bears, so there's still a lot more upside needing in this ETF before it's no longer looking so bearish. Now, I will say this is a very strong support level in the low 80s, right around 80 to 81, but if we break below this support level, we could be seeing ARKK going all the way down to about $70. I don't necessarily think we're going to lose this support level, but let the price action do all the talking. The first sign that we could be getting bullish will be a breakout back above about $91, but you really need to see ARKK getting back above 99. So there is a lot of resistance for the bears to continue to short this ETF, so don't rule out the possibility that we get rejected at any of these resistance levels right around 90 to 91 and continue to go lower, possibly getting another double bottom off of the 80s. On the VIX, we did have a very large spike in volatility intraday, but overall the VIX didn't really close up that much, only going up 3.52% today and still closing below 20. Remember, we need to see the VIX starting to close above 20 to get more volatility and a deeper correction, and we really need to see the VIX closing back above about 24 to 25 to see that full-blown correction. If you start to see the VIX getting crushed from here, that will be a bullish indication, and the lower the VIX goes from here, the more bullish the stock market will become. On Bitcoin, we're currently down about 0.25%, and we see Bitcoin did test that very critical support level right around 40,600, and so far we did see a bounce off that level. If at any point we lose this support level, we could see Bitcoin going all the way back down to $30,000. So right around 40,000 is going to be a very critical support level for Bitcoin. We have the full bear trend and price action is below all the moving averages, so the last line of defense will be this support level. Now to start getting more bullish, we need to see Bitcoin back above 51,000 and starting to break back above 53,000. That's a long ways away, so don't be getting overly bullish, especially if we lose this support at $40,000. You have the strong bear trend, so you need to respect that the trend is lower, which means price action is more than likely going to go lower until we can get a price action breakout at least back above the 50 EMA. On NVDA stock, we were up just over 0.5% today, and we're still closing above that critical level at 271. Intraday, you can see that we did test critical support right around 260, and we never quite got down to 253. Now remember, if we start breaking and closing below 271 and we lose support at 253, it's going to be a very quick trip to close the gap at 233. So this is going to be a very critical support zone for NVIDIA stock that we need to see price action holding above. We're starting to see a lot of bearish momentum and bearish trending building up, so the faster the bulls can get back over the 50 EMA right around 285, the better. If NVIDIA can't close back above 285, it's very likely going down for another leg lower, so look for strong support at 253 if we close below 271. So to the upside, look for resistance right around 276 and 285, and we'll be looking a lot more bullish if we can get back above about 293. On Tesla stock, we were up just over 3% today, so overall a pretty bullish day on Tesla stock. We did test intraday that critical support at $1,000, and remember, if we close below that level, we're very likely going to close the gap at 940. So watch that very critical support at 1,000 and respect the fact that a breakdown below that level should be a quick trip to 940. We're back above the 20 simple moving average and we still have the bull trend. So it does look like Tesla stock is going to test the resistance trendline breakout level right around 1080. On a breakout above 1080, we can go all the way back up to 1208 or 1240. And on a breakout above 1240, we're looking for a brand new all-time high price target at 1400. So right now, Tesla is still looking bullish, especially on a breakout back above 1080. On Apple stock, we were flat on the day, going absolutely nowhere, but intraday we were trading down around 168. The strongest support level is now going to be the 50 EMA, which is sitting at 167, and if we lose that level, we are very likely going to see the full-blown correction in Apple stock. So strong support levels are 166 to 167, otherwise we're more than likely going all the way back down to about 162 or 157. Now upside resistance is going to be up here right around 176, and if we can get back above that level, it will be looking a lot more bullish. Above 176, we can retest the previous all-time high at 182, and above 182, you're looking for a price target up there at 188. We did lose the bull trend, so don't get overly bullish on 188 because it's more than likely just going to see consolidation and possibly a retest of the support trend line before we can go any higher. On the financial sector, we were down about 0.34% today, and intraday we did test support and did bounce off of that level. We did regain the full bull trend today, so the financial sector is looking very bullish, and it does look like we're going to continue to push higher to brand new all-time highs. We're getting a little overextended, so don't be surprised if we cool down a little bit first. On the industrials, we were down just over 1.1%, and intraday we did bounce off the 50 EMA, and we did hold on to the full bull trend. The healthcare sector was up just over 1% today and did close back above the 50 EMA, so it does look like we're starting to see a bounce, and don't rule out the possibility we could be bouncing to go close that gap above. On the energy sector, we were down 0.31% today, and we still have the bull trend and we still have the bullish price action, so the energy sector is still looking very strong. So jumping back over the S&P 500, don't forget about the possibility that this is the strongest support level in this bull rally and it's not going to break down. You want to take great risk reward ratio trades, and that's exactly what today gave you. So if you panic sold at support, you really need to rethink your trading plan because you more than likely don't have one. If you're panic selling at support, you probably don't know what you're doing and you're just trading on emotions. I'm not trying to be mean, I'm trying to tell you to just take a look at your trading plan, and if you're selling at the strongest support level that SPY has, you more than likely don't have a robust trading plan. So stay objective and follow the price action, and while yes, everything is getting dicey and very volatile, we still need to respect the fact that the price action is holding above support trend lines. That doesn't mean we can't close above it, so you still need to have an exit plan and you still need to prepare for a full-blown stock market correction in the event that we do see one. Don't just assume it has to happen, let the price action confirm it. Also remember that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF QQQ. Bank Trade Alerts makes a profit whether the market is bullish or bearish, and you don't have to worry about what the market is doing. You just follow the trade alerts and you will crush this market. If you're interested in joining Bank Trade Alerts or finding out more information, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're looking to join the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.